You probably don't want to blow your account. You want to stay alive for as long as possible in the market and become profitable as a trader. Then this video is for you because risk management, in my opinion, is one of the most important things that you can do in order to become profitable long term. Now, for full disclosure, I have been profitable on demo. I'm currently around break even, slightly in profit on my live account. So you need to know that. I have collected these things from various people. One of them, and a lot of it actually, is coming from Nick Sean. You can check him out. He has a great YouTube channel. He's my mentor, and I've learned a great deal from him. So the stuff I'm presenting here is valuable and is not just something I've just came up by myself. It is actually from someone who has great experience as well. Now, before we go any further, if you want to check out what I'm up to, you can head over to the Telegram channel. I'm running one where I'm sharing my trades. You can see how I'm managing them. I call them out. You can see when I close it, when I add to it, mistakes I make, some of the successes I have, etc. The link is in the description or in the comment section. All right, so let's look at risk management. And one thing, and the mistakes really people do, because one thing I've seen with risk management over and over again is that people hyper focus just on the trades. So they think that the risk is how are you managing a trade, how much size you put on a trade. And yes, sure, these are important things, but I want to cover something that's a little different, but really relevant. And so we're going to take a much bigger picture in today's video. And so the very first thing where risk management really starts is before you even open an account. Before you open an account, not when you have opened an account and you're placing a trade. Why does it start so early? Well, because you need to look at your unique situation. What are your savings? How much of your savings are you allocating to your trading capital? What is your income? What is your skill level? So let's say you don't have a job. Is it easy for you to get a job so that you can build up your income again in case you lose everything? Like, for example, you have someone who has a $100,000 or $200,000 job, has $100,000 in savings. That's a very different story than someone who is working a job that's $30,000 per year and they have $5,000 or $10,000 or something like that in savings. That's very different story for them, and how much they're trading and the risk that they are taking. And so you need to be aware of that situation. You also need to be aware of your personality. Are you someone who can handle risk? Are you going to freak out? And sometimes you don't know these factors. You need to kind of just go and try it out and see what happens, see how you react. I've been an entrepreneur before. I've been living with uncertainty pretty much all of my adult life. So I have a different relation to that than most people. A lot of people probably will be freaking out in the position that I'm in at the moment, which is I don't really have a job. I have a good amount of savings, but I don't have a regular job, and it's not necessarily the easiest thing for me to do. And so I'm here trading. Many people might not be able to do that emotionally. They will be freaking out. But anyways, everyone is unique and there's no right and wrong or better and worse. It's just you need to be aware of it so that you can set yourself up for success. And the better you know yourself, the better this is, which is another point, but we'll get to that later. So anyways, the second point is when you actually open the account. So you have assess those things. You're opening an account. How much are you putting into this account? Are you putting in your entire trading capital into this account? You need to know the risk of that, because many people don't. You think, hey, look, I'm in a trade right now here, USD CAD. I have a stop loss up here, so I'm all fine. No, you're not all fine. What happens if Trump gets shot or some other crazy event happens and the market goes absolutely crazy? Your stop loss is going to get run through. You might get filled at a really horrible price, and a large amount of your account might be gone. So let's say you have 10,000 in trading capital. You put everything into that account. Some event happens. Well, your account is gone. All your trading capital is gone. You're back to square zero, where you have to build up your capital. You need to be aware of that. And many people aren't. And so they put everything into it. And I do suggest, I strongly recommend that you actually show yourself that you can do it on demo account before you switch over into a live account. And when you switch over into a live account, I would never suggest to put everything in. And by the way, nothing I say, of course, is financial advice. I'm just speaking of how I've done it and how I look at it. So you put in a percentage. Let's say you have 10,000, you put 1,000 in. That's 10% of your capital. If you blow that, that's not such a big deal, because you still can do it 10 more times. You put in everything. What's left? you're screwed afterwards, right? And so you can show yourself, I'm profitable with 10% of my trading capital. I can allocate a bit more. Or you can also do what Nick Sean is doing sometimes, which is you have 10% into the trading capital, you know you're profitable, and you basically, instead of increasing the total amount of capital you have in there, you just increase the percentage that you risk per trade on the account. So let's say you're risking 1 to 2% on each trade, which is standard in the industry. But you're much more confident, and you're like, I'm basically saying I am trading with 10K. So instead of risking 1 or 2% of 1K, I'm risking 1 or 2% on 10K, while not the whole 10K is in the account. So you're going to be risking, 10, 20% per trade on the account, but that is in relation of the account, not the total trading capital. And so you can still grow yourself very decently and very fast. You can double the account rather quickly because you're taking a large amount of risk, so-called, in quotes, on the account. And yes, when you are taking these kind of bigger bets, you are in danger of blowing the account. And that's something, again, that you need to know. So if you're engaging something like that, you need to know, okay, well, if I'm taking a 30% on an account trade, and I have 10 accounts, I blow 3 of them and I grow 7 to the target of doubling the account. That is a profitable approach. There's nothing wrong with that. You can do that, but you need to know the stats. Otherwise, you're going to be lost. And so that only comes with experience. And that is another thing I want to mention, that which is really the next point, is you need to assess risk based on your experience. The less experience you have, the more dangerous this is, because you don't know what you're doing. And there's a Dunning-Kruger effect, which basically is saying that when people are they have some knowledge of a field, they way overestimate their knowledge and think they have gotten it figured out. And in trading, that's especially dangerous, because you can then become too cocky and put too much size on too soon, thinking you've got it all figured out. And that is dangerous. So assess the risk based on your experience. The more experience you have, the more you know, hey, I've got this, I've done it, I have recovered from these kind of losses. So for example, in my case, I opened my account, my live account, I went on a losing streak for a couple months. I lost 40% on the account. I recovered the entire amount, and I'm starting to make profit. That for me is a confirmation that, hey, I can recover from losses. And I saw how I handled the losses. You have no idea what it's going to do to you when you have 40%, 50%, 60% of your account gone, or if you were to lose your entire account. You don't know what that does to you and to your psychology. And so you need to have the experience to actually know it. And the more you have the experience, the less and the more accurate you can predict the risk and be smart about it, rather than just, aping in. So let me check. I have a little notepad here so I don't forget everything. Number 4 is that you are not pre-planning your trade. So let's say you see this, you're like, hey, look, it's a potential resistance. This was a trading range here. And I placed a trade because it looks like it's bouncing. And this is my risk structure. It's 1-to-1. I'm targeting the previous low. Reasonable to take profit. You need to think about all of that before you just go and press the button. But then you need to look at, okay, how much am I going to be risking on the account? Am I going to be risking 5%? Am I going to be risking 1%? And how do you assess that? So let's say you are here and you want to add to the trade, right? So it's going to go against you, and you need to think about that. You just look at, okay, it's going to go in profit. No, it might go against you. So what's your plan if it goes against you? Are you going to add to it? How much are you going to add to it? Are you going to add the same position size? You need to think about that. Okay, I'm going to be adding here if it's coming up here, or maybe somewhere here, because that's another potential resistance zone. And I can add again up here. How much is the total risk on this trade, right? So for example, for me right now, if it goes up here, it is $100 risk. So maybe up here is maybe $130 risk. I can add to this, no problem, with the size of account that I have, and I can add again up here. Why can you do that? And why is that a good idea? Because in Forex especially, you have a lot of mean reversions. So if this were to go against me hard, there is a likelihood for it reverting. I've done testing on that on the demo account. I've been in a trade on the demo account for 1.5 months where I've added at multiple places, and you can add with a multiplier, so it's easier to get out at break even. But it's basically a DCA approach, dollar cost averaging approach. It works, but you need to think about that. And if you're using a stop loss system, you're like, okay, how much am I willing to risk on this trade? Is this really the point where this trade invalidates, or would this be a place where I would want to go in again, right? And maybe with a bit of a heavier size. All these things you can pre-plan and think about, rather than just aping in and then just kind of winging it as you go along. You don't have to everything written out in stone and be like, this is my exact plan, I'm going to stick to this plan. You need to be dynamic in your trade management. Obviously, price action and how it unfolds is going to inform what you're going to do if this trade unfolds in a certain way. But without this kind of pre-planning, you're going to be very emotional when things are happening. You only looked at the potential profit, which is, by the way, the next one. You basically only look at the gains and you don't look at the potential losses. So are you going to be okay? Let's say you put in 10% of the account on this trade, which I didn't, and I wouldn't. I don't think it's that trade setup is that great to risk this kind of amount. I think there are trade setups that are absolutely worth risking more, but this is not one of them. So are you okay if this goes against you and you have a stop loss and you're going to be stopped out and you're going to be losing 10%? Are you going to be okay? I wouldn't, which is why I didn't do that here. I don't think that's a smart choice to do. So anyways, so pre-plan your trades, but also keep in mind, what other positions do you have? So let's say you are going in heavy. You're putting in 10% of your account in it. Then you have another 2 positions open, putting also 10% into it. You need to think about what's going to happen if all positions are going to go against me. Am I going to be able to manage this trade? And let's say you actually want to add to the trade with a 10% position. You're going to be in hot waters. You're going to be down 30%. If everything goes against you, and then you're increasing your risk even more, because now you're going even higher. Maybe your total invalidation, where you really think this trade there's no hope, is somewhere up here. So your total risk is going to be, a lot if you have that heavy hand and you have multiple positions open. You can limit that risk by, for example, opening multiple accounts. You can open one account and you can go in with 10% on that account, and you have another account and you go with a different currency pair in 10%. Then you can manage it much more dynamically without being pushed to the wall right away. So these are all things that you need to consider. How much other trades you have open? Are you okay when they're pushing against you? And also, are these correlated assets? This is another USD pair, meaning if there's news, it's going to be moving in the same direction pretty much, because they have a high correlation, or they have a negative correlation, meaning this is going to go into profit, the other one is going to go into drawdown, most likely. They are these kind of correlated assets. You need to look at that and understand it before you go and put on the trade. And then, of course, number 6 is, you want to not ignore your mindset and your emotions. Okay, this is really, really important. You can have all the ideas about your trade, you can have the right risk management, and then somehow you get emotional. You take your entire trading capital, you dump it into your account, and you put the whole thing at risk because you're emotional, you're revenge trading, you're too cocky, too greedy, whatever it is. If you're doing that, that's very dangerous. So you need to be aware of your mindset and your emotions, and actually monitor them and learn to regulate them. I've actually created a Reddit post on that. I should create a video on it as well. It is really important to have that, and to have some kind of rules that you never are going to break. So for me, one rule is I am never putting my entire trading capital at risk, because there can be events that can wipe out a large amount of the capital. That is way too dangerous. I'm not allowed to do that. I don't care how successful I was. I'm not able, I should never do that. I always need something on the side to be able to put in if anything happens. So have that rule and never break it. But you cannot never break it if you're super emotional. So make sure your emotions are in check. You know what ticks you off, and you know how to calm yourself down. Otherwise, you're a ticking time bomb. That's not, you can't, how are you going to do proper risk management? You have all the nice ideas about how much to risk per trade, 1 to 2% of your account and whatever, and then you go ahead and you do something super stupid. It's just not going to happen. So you need to make sure your mindset is in the right place. You know how to work on yourself. You know how to confront your demons. You know how to regulate your emotions. You know how to stay disciplined through this process, because otherwise it's going to be a lost game. So anyways, here we are. Those are all. I think I've covered them all. I'm just going to go through it real quick. The first one was risk management happens before you open the account by looking at your situation. Then it happens with the account opening by not depositing your entire trading capital into it. By assessing your risk based on experience. That's the third one. The fourth is not pre-planning your trade. That's a huge mistake. You need to pre-plan it and have in mind what other assets you're trading at the moment, and if they're correlated, strongly correlated or not. Then you have ignoring your mindset, which is one covered right now. And the last one that I've mentioned as well is looking at the gains rather than the losses. You need to be looking at the losses rather than the gains, because if you're getting wiped out, there's no point in how much you could have made. You got wiped out. Yeah. So anyways, this is it. If you like this video, share it with other people. You can give a like and subscribe to the channel. As said, you can head over to my Telegram channel and you can check out what I'm up to, how I handle my trades and how I handle myself. During those trades, I am not perfect. I make mistakes, and of course, I cover these mistakes. I do every week a recap of my trading week, looking at some of the trades, sharing some of the setups that I'm seeing in the Telegram and also here on YouTube. And I, of course, do videos like this where I share knowledge I've gathered throughout, being mentored, looking at courses, etc. So anyways, I hope this was useful. I wish you a beautiful day. Stay safe in the market. It is dangerous trading, and many people lose money. Keep that in mind, okay? Take care.